Good afternoon, everybody, and welcome back to another Stocktwits Q&A session. I'm your host, Brittany Umar, joined by Evan Lazarus. Let's jump right into it. What do you think?
Let's do it.
All right. Our first question, more of an educational question from Khalifa Trader, asking if you could shed some insight on how you review your past trades to improve and learn.
How I review my past trades? Well, in the active trader class, we teach traders to constantly review and evaluate performance. And the way we do it is we print out your trades. At the end of the day, you go through and you evaluate where your executions were, and we create binders. So even when I was a more novice trader, every day I would print out my trades. You know, some days it was 1, some days it was 10. And I would evaluate where where my executions were and why, so I could go back and I could reflect upon, why did I buy here? Why did I sell here? What was my rationale for doing what I was doing? So what I was essentially doing was trying to uncover a reason for my actions, so that, when I was buying or selling stock, I knew why. Again, the key being why I was buying and selling stock. So what I have traders do now in the program is print out your trades after every single day. Go through, mark up your charts, write down reasons for what you were doing, what you were thinking, how you felt, what you thought was going to happen, what your risk was, so on and so forth. There's a whole checklist of questions that you have to go through at the end of each day so that you can evaluate and interpret your performance. So that, it's not about necessarily what you did today, but it's about review. It's about constantly going back and saying, oh, I remember I did that 2 months ago or 3 months ago. I've learned from that. I don't do that anymore. I make new mistakes. So I think that as far as the educational curve goes, printing out your charts, putting them into a binder. My binders are broken up by type of trades they are: gap trades, morning trades, reversal trades, pattern trades. So I created ultimately a binder, and I could go back and I could look at all the different types of trades I made. So I was developing an arsenal of different type of strategies that I would use and cultivate over time. So that's a really, really important part of what we do, especially if you're in your first 2 to 3 years of trading. That little piece, that little extra work you do will pay itself off in spades if you commit the time to do the work.
All right. Well, turning to today and what we saw out of the market today, Now Decide asks if you think that today's half-hearted reversal negated a possible downside break to the ascending channel.
Whoa, that's very
specific.
Very technical. I feel like I'm a doctor here. Look, today was just another trading day. I don't know that we can really dig deeper into every single day and put every single day under the microscope and try and evaluate every single day as if it is the most important day. Let's take a look here at the chart and let's look at the spiders. Let's talk about what is and possibly what isn't. And I do this all the time, and you've seen this before in other broadcasts, where I like to take the candlesticks off and we look just at moving averages. And when we do that, we get a real sense of what's happening, because in trending markets, you're going to see certain environments. You're going to see trending averages, which look like this, okay, as an example of an uptrend. And you're going to see when things are not trending. And when they're not trending, they generally look like this. The red being a 21 EMA, a flat 21 EMA, an 8 period that constantly whipsaws up and down with the ebb and flow of the shorter term price movement. And it creates a lot of chaos from day to day to day. Now what you're seeing is that chaos. You're seeing ebbs and flows and ebbs and flows. And every time we look like we're going to rally higher, we're going to turn down. And every time we look like we're going to, maybe fall off a cliff, we possibly turn back up. We are flirting here with breaking a little bit of this uptrend line. You can see, we broke below on a gap down this morning, traded back up. Not really much to make of it. We opened and closed in basically the same, in the same spot. That's what this, this is the spiders here. So there's really not a whole lot we can take away from today. I would keep an eye on this, shorter term rising trend line. Is this a break of a little bit of an ascending, channel here that I know Scott has talked about for potentially something that, could become larger to the downside? Or will we trade back up tomorrow and, trade back into this range? I don't really have that crystal ball to make that insight. For this point, in a sideways trending market with a flat 21 EMA, the best trade right now is purely a day trade. I personally have been going out flat every night, coming in, trying to be fresh with my perspective, being flexible. Some days will be short, some days you're going to have trades long, until something changes. Structure really hasn't changed dramatically here, and until those averages either start to curl and trend higher or curl down and trend lower. Right now, you're either best left on the sideline or in the day trade arena.
Well, let's check the temperature of some sectors. We've got one viewer here who is really loving the rails. So wants to know what you think of the rails, particularly Kansas City Southern and Norfolk Southern, KSU and NSU.
KSU. I'm not it's not a sector that I track closely. So when I don't track something closely, I always start with the weekly chart. Let's take a look at the weekly here of Kansas City Southern. Nice uptrend here on the weekly. We've stalled out. We look back to November, October of last year. We're basically in the same place, so not a huge, travel range here as of late. Little bit of a bear flag here on the weekly. We have to keep our eye on that. Let's zoom down. We'll go into a daily chart. Same kind of thing. Kind of mirrors the S&Ps a little bit. I'd be careful for a heavy volume break of this lower rising trend line. Volume's going to be key here. Any big push down or big push up with volume will probably give you clues. At this point, I'd probably be a little bit hands off, not necessarily the place where I'd be looking to commit a lot of capital. So as far as railroad goes, I hate to be non-specific and say, well, definitely not up, but definitely not down. But in this case, we don't really have much of a trend in place here. Look to the left. We're basically in the same place we were 6-8 months ago. That could be a healthy base. We could break higher. We could break lower. Volume will be key if and when that volume comes into play.
And T. Ling asks, any comment on the casino stocks, LVS and WYNN?
Well, the casinos, again, had a nice run. Casinos have been, for the better part of 09, 2010, 2011, a lot of these stocks came back from the dead. WYNN here as an example. This is, again, weekly chart showing bigger picture, just trying to get sort of that broad stroke of where we've come from and what's happening overall. I love weekly charts. They're great for clarity. If you're ever unsure about something, go up a time frame. So if you look at the daily as an example, you can't really make heads or tails here. Go up to a weekly. A weekly is just going to give you a more macro landscape, and you're going to see strength or weakness. This is a very scary looking weekly chart. You have this big impulsive move down, and you have about a 10 weeks worth of consolidation on the lows here. And it looks like we're going to try and push lower here in WYNN. Next level support, should we get that break, probably down here, which is where it's flirting with. Below that level, we could see down into the $75 to $80 mark in WYNN. And Vegas, LVS, the two casinos that I track. LVS, same kind of thing. Major support down here, $35. Looks to me it's going to try and the stock's going to try and test into that level. As the days go, you can see it's weakening. Here's the daily, major downtrend in place. And I'm pretty sure we'll probably break away here over the next couple of days, maybe trade back into that 35 area, and then you'll probably see a short-term bounce off of that, as that would be a much more significant, or what we call major support area. So right now, casinos look like they want lower, but they could see a bounce, in the days ahead if they do start to stretch down.
Now, switching over to internet stocks, Q4 asks where you see Facebook going from here. He says it looks like it has upside potential. Do you expect it to carry Yelp, Zynga, and sympathetic plays higher?
Let's talk about Facebook before we talk about everything else. I know that traders love to look at one stock and then have that be the proxy for all other stocks in that sector. But you have to look at a lot of these stocks that are, sort of new wave, social media. There's lots of players in this space that can make the argument for fundamentally, this is the next thing. And then there are a lot of probably the other side of the coin that say, it's all sort of smoke and mirrors and they have no valuation. So there is that tug of war fundamentally, but every stock is unto itself at this point. When we look at Facebook, without getting into the whole, rehashing of the IPO, and it's sort of, we've done that many times. The reality of it is 33.50 is the line in the sand. That's your line in the sand. Anything below 33.50, I'd probably be hands off until it really comes to life. To me, that trade isn't there yet. If it does take out this little micro support here, we could trade back to the 28 level. So this trade right now is a day trader special. It can go either way. It needs more time before anybody can make sort of longer term, trade ideas on it, in my opinion. I know there's going to be the bulls that are Facebook bullish. I know there's going to be the bears that are Facebook bearish. It didn't exactly have the most stellar IPO. It did, we did get a retracement trade off that. Now it's sort of in this pattern where it's not necessarily a great long. It's not necessarily a great short. Like I said, the line in the sands are where they are. 33.50 on the long side to me with volume will be my key to know that something is changing, and it's probably safer to test the waters on the long side. That trade does not look like it's going to happen, in the next day or two. So for now, Facebook to me is just one of the stocks that I'm going to avoid. Now, as far as the second part of the question, where, what about the rest of the sector, the ZNGAs, the
YELP,
YELP, they're all different. We have to look at everything unto itself. ZNGA to me is in a downtrend. It's been in a downtrend. It's a weak stock. There's an outflow of capital. The 21 EMA is declining. It's been declining. Every bounce has been sold. If you're trying to be long the stock, ultimately what you're doing is trying to pick a bottom, and that is a very, very, very difficult trade to be involved with. For every time you pick a bottom, there's going to be the next 9 times that you're wrong. So it's not a profitable trading strategy. It's not something we preach. It's not something I look to do. I'd rather pay a higher price and know that something's changing and the trend is changing than try and pick a bottom and be a hero. Heroes don't make any money in the market. We know that. So the Facebook, ZNGA, YELP trade to me, there are different stories here, and every story needs to be treated unto itself. You can't make the argument that because of one, you're going to have follow through in the others. It just doesn't work that way.
And sticking with tech, at least DBQ, looking for your comments on Apple and Google right now.
Couldn't go a day without Apple.
Of course not.
Listen, I trade this stock probably more frequently than any other stock out there. It's been a great trader, whether you're on the long side, on the short side. There's been opportunity for everybody. And the reality of it is we're going into earnings season. Around the corner, the stock will have earnings in I believe it is a week or two. The line in the sand here is definitively 620. We've seen it tested, and I can make this chart nice and big. We broke here initially from these all-time highs. We snapped into 620. We fell apart. We had earnings. This was the last earnings call. We gapped up into 620. We fell apart. We've now rallied back to 620. And 2 days ago, we saw that sell-off into major resistance. So in terms of making any bold calls, let's just respect what we have. We have a stock that has a formidable level of resistance that still has a nice uptrend in place. There's still more buyers here than sellers, as we haven't seen any sustained lower lows and lower highs. With earnings around the corner, that will be a catalyst to get this stock out of this range. When I say this range, I'm basically using it as 560 up into 620. Below 560, the stock probably will get back and test these 520 lows and possibly lower. Above 620, I suspect will probably make new all-time highs again. As 640 or 645 probably isn't going to be that challenging of a resistance level. So we'll see. Right now, like I've said to my traders on the trading floor and in the VTF, day trade only. Don't have any longer term, opinions here. Respect the levels. The levels have been very, very tradable. So for those of you that are seeking active trades, this has been a great instrument for us, a great vehicle. When it takes out major resistance or major support, we can probably make a longer term analysis on where it's going to go and why. But for now, let's just view it as it is. With earnings around the corner, probably going to be some good day trades, a lot of volatility, both long and short. And that's the way we're going to look at it.
Speaking of which, big day for JP Morgan tomorrow. A lot of you have questions about that stock. Heading into tomorrow, what is your game plan for JP Morgan?
Well, my game plan is, quite honestly, to just evaluate it as it comes. I'm not really in the business of making guesses on higher or lower. I'm in the business of reality and price. Price dictates what we do. Should JP Morgan have great numbers, it'll be reflected in the price tomorrow morning. Should they miss or should it not be what the street expects, it'll be reflected in price tomorrow morning, and I'll be able to make sound judgment calls as far as trades on what is a good risk-reward ratio. Right now, if we look at it on a larger chart, again that weekly, we broke on big volume, we bounced, we got that little 3-bar bounce, and right back into these averages on the weekly, which are now declining, and we started to sell off again. This is not necessarily a picture of health. Banks, a lot of these big financial institutions, you have not seen an inflow of capital. I don't necessarily know that this earnings call is going to be the driver for that, but it could change things. I think JP Morgan, as a trade above 37, presents opportunity for the bulls. But right now, it looks like the bears are still in control going into this report. Obviously, the street is very sensitive to these big banks. There's lots of headline risk out there. And a lot of the news that you've seen fundamentally hasn't been great news. Losses, scandals, these types of things. If there's fear out there and the market smells fear, it will take these stocks down, and it will do it in a very, very fast way. So be careful. I think there's a lot of risk in banks.
Level 2 asks, how important will JP Morgan, not just JP Morgan, but Wells Fargo be for tomorrow's market action?
Well, so goes JP Morgan, so goes banks in general. I'd say Wells is probably the strongest looking chart in all of, the big banks. Here's a weekly. This is a daily. Let's take a look at a weekly. We have the line in the sand on the weekly, which is a much more significant level, is just above 34, right? 34, 35 zone. A break of that level on volume could start to take this stock higher, but I think every bank will wait for their own specific earnings reports before breaking out. I don't think, great numbers in JP Morgan will necessarily, get Wells Fargo to break out. You got to be careful here. As you can see from price, this is a major area of resistance. Tested once, tested twice, tested 3 times. At some point, if it can't rally through here, it's probably going to begin to leg down. So we have to be careful in this zone with a lot of these banks. And while we're on the topic, let's just pop over to Goldman. Because Goldman, same thing. Again, outflow of capital. There's a tradable level that's starting to develop just around 90 bucks. It's starting to base here. I think, the driver, the earnings call for Goldman will probably be the catalyst to get it out of this, consolidation pattern. Below 90, it's a sell. Above 100, plus or minus, with good volume. Again, volume being the key, to me would be the signal that, we could probably leg back higher and start to retrace some of this downward price action that we've seen.
All right. And Market Picker asking, switching things up a little bit, what are your thoughts on the sideways action in Cardinal Health on the weekly chart, CAH?
Not a name that I really track. So let's go and let's take a look at the weekly. Look at this really tight, basing pattern. This is a stock that at some point will have a large move. Generally, when you get, year-long or multi-month bases like this, at some point when they come out of this base, that stock is probably going to make a larger move on a macro level. That base to me probably looks like 44 plus or minus, down through 40. So when this stock, like I said, with volume, because volume will be a catalyst, when we get out of this base with some volume attached to it, that's when I think you'll get a more actionable trade. Right now, I wouldn't even waste 5 minutes of my time being there.
All right, we're going to take a quick commercial break, and then we'll be joined by Mark Sperling to answer your questions live.
Hello, everybody. My name is Pete Renzulli, Chief Marketing Officer of T3Live.com and one of the traders in the active mentor room for T3 Trading Group. What I'd like to do today is I'm really excited about introducing you to and inviting you to the first T3 Live Active Trader Summit in New York City, which is on Saturday, July 14th. We're going to have quite a few speakers today. There's going to be myself, Mike Lee, Evan Lazarus, Mark Sperling, Rob Smith, Rick Meadows. There's going to be a ton of great content, but the number one reason you want to come is you want to be able to network and associate with other like-minded people like myself. I'm going to pump you up. I'm going to guarantee you that. Other people like yourself who have a burning desire to learn how to be a trader. So I'm going to ask you to make a trade. Trade one Saturday for some of your time to come down and learn strategies, tactics, techniques, and put some faces to the people that you see in the virtual trading floor in T3 Live and learn to take your trading bigger. Learn how to be a better trader than you are now. Learn the strategies. It's going to be a lot of fun. I can't stress that. I know it's a Saturday, but you know what? I want you to be there, to get excited, and to be here. Prove to yourself how bad you want it. Show up and come down and get excited with us. Saturday, July 14th. Now, very quickly for the registration. All you have to do is register at T3Live.com or be an existing member of T3Live.com, and you get 2 complimentary admission tickets for free. So all you have to do is go to T3Live.com and register. If you would like to join us at the post-event cocktail reception, you can also upgrade to either premium or VIP. That's up to you, but either way, please take advantage of the general admission, 2 free tickets. Bring a friend, bring a neighbor, bring a wife, bring a girlfriend, maybe bring both, but come down and expect to have a great time. Saturday, July 14th here in New York City.
We're back answering your questions live. This time around, I'm joined by Mark Sperling to offer a different point of view. Welcome, Mark.
Thank you.
So first question from Stock Craze, asking if you think it's a good idea to go long Netflix and short Pharmacyclics, PCYC, as of the close today.
Okay, well, one, it's not a hedge. They're not equivalent stocks, so just separate the two first and foremost. Let's talk about Netflix. We talked about it. I was talking about it on the VTF, on Twitter for a while. Above 70.50 was the first trigger. We know the stock is heavily shorted. We knew it was at the right place, right time. I did not think it was going to move, you know, 30, almost 30%, but it did. That being said, it's a heavily shorted stock. It now has based, and I have the daily chart up at this point in time, is based for about 5 days. And it's hovering right around 85, and the level that we got to watch is 85.40, and I do believe it is a good long, and I think really you love to buy it at the bottom end of the range, which is around 80, but I think tomorrow you're going to get a trigger above 85.40, and I think you're going to probably see 90 in the short term. It's heavily shorted, so I think the shorts are going to have to cover. They had their chance to come back down to, you know, the 72, 75. It didn't happen. If we have an update in the market, I think we'll probably gap up and look for, you know, anywhere from between 88 and 90 as a short-term target. So I am long it overnight, and it's something I am looking for, and I've been actively trying to trade it also. PCYC, I have been staying away from it. I get nervous with biotechs overall because you never know what's behind the scenes. You know, when trials are taking place, when buyouts are happening. We're obviously in a biotech craze at this point in time. So you got the strongest stock on the board, basically, the strongest biotech I have seen in a long time. The move is tremendous. Here's the daily chart. But it did put in a bar on yesterday that really went below its 8-day moving average and it tested its 21-day moving average. Now, today it actually recovered, and it's hovering between its 8 and 21-day moving average. So if you're going to short it, use the previous highs as the level, and we'll go from there. But it's not my cup of tea, but I do think it's a little bit safer based on the volume that I'm seeing, that it's a little bit safer to short it at this point in time versus just trying to catch a stock that just keeps making higher highs.
Sounds good. And Audubon asking if you have any comments on LNG today.
LNG. Well, you got natural gas moving nicely. This is a tremendous move. I like the fact that it had 4 or 5 days of downward action. 1 day almost negated that entire move. To me, I don't know if it's a buy right up here. You probably want to get it closer to 1450, but the fact that it did regain its 21 and 8-day moving average is a positive sign for me overall. And let's just put up the weekly chart just so we can see where it's at. It's above its 8 and 21 day. Decent, but again, I would try to get it closer to 1450 than necessarily right here. And if you're going to buy it above the 1560 range, you'll probably need it as a short-term trade, and then you'll probably get a cheaper price at some point in time.
Bless says he was stopped out of QCOR yesterday. Any thoughts as to where to re-enter and where to put the stop? He says he's new to this, so. Okay.
Well, if you're new to this, don't play QCOR. QCOR, if you take away this big red bar, 2 days ago it gapped up on some news that supposedly the news was out a year ago. And so it was out, but that wasn't known until the day after when Citron Research downgraded it. And again, I'm not a fundamental trader. You have to know what's happening across the board in the news, but based on what I'm seeing on in this stock, it's an avoid across the board. I'm not buying it. I'm not shorting it. If you're going to do anything, play the ranges. You can see the 8 and 21 day moving averages have crossed. Probably if you're going to short it, I'd think 49, 49.50, 48.50. In that range, I'd be looking to short it. I would not short it down here, and I wouldn't be buying it right now. There's too much. It's too news driven. I'm staying away.
Okay. DZJ asking, what do you think about Marathon Oil as well as ticker RES, which is RPC? It's always a confusing one.
RES is RPC. Marathon, I don't really trade Marathon that often. I'm not seeing a whole lot on the daily. It's certainly a low beta stock. The oil stocks in general have been lagging the market overall. Right now I'm seeing it trade below the 8 and 21 day, and I keep talking about that. If I don't know the stock, if I don't know the price action of it, I obviously have to look at the footprints of the chart, what it's telling me. And what it's telling me is right now, it's basically just stagnant to a non-event, and which means I'm just avoiding it. If you're going to buy it, if you're going to look at that aspect, get it closer to 24, use 23.50 as a stop. Maybe a trigger above, it looks like around 25 and change could be a trigger long, but it's a low beta stock, it's a little bit boring, and it's not something I really go after across the board. What was the other one? RES?
RES.
RES. RES, okay. Not terrible looking based on what I'm seeing on the charts, but overall, again, the fact that I believe it's a 200-day is basically flatlining. I think it's one of those stocks that, quite frankly, isn't going to get a whole lot of action for a little while. But if you're going to get involved with it, get involved roughly around here using $10 as a stop for a short-term target of around $13.50. That's how I weigh my risk versus reward. Look at the lower end of the range, see if it makes sense from a risk versus reward basis, and use the top end of the range. And if it makes sense, if it's a 2-to-1 ratio minimum, I might take a stab at it. I don't know the company either. Based on what I'm seeing on the chart, it looks okay right here.
All right, let's pull up the chart of VHC because we've got a little bit more of a specific one here. Puckbag asking Mark, yeah, I don't know.
I don't know how you got that name, but good luck to you.
We're just going to roll with it. Mark, looking at the day chart on VHC, how do I avoid getting stopped out, buying and selling the midday channel? Where should buys and stops be?
Okay, VHC, tremendous performer this year. It's been grinding higher, and you can see this is the daily chart we have. It's been respecting its 21-day moving average the entire way up. So, to me, that means I'm going to try to buy it as close to the 200-day moving average as I can. Am I going to be buying it up here? I know it gapped up on some news this morning. No. Closer to 35 is where I'll be looking to get involved. If it does penetrate the 200-day moving average, you keep a tight stop and you wait to see it recover from there. That's the key. It's in a trending. It's a trending stock that, quite frankly, is in a 3-month trend on the upside. It's moved a decent percentage. I would be looking to buy it closer to 35 at this point in time. 37, 38, not there right now.
All right, well, we're going to bounce around a lot because we're getting questions specifically for you about all different stocks. So here's one from D. Stein. Where does Priceline go from here?
Up or down? Priceline. It's something. It's one of my little pet projects. I like to trade pretty consistently. Somebody was like, you know, when I was trading it around 635, 640. Took advantage of it to the move almost to 700. I think I sold, 680s in that range. Obviously hit 697. Has now come in probably for 7 days consistently as the market has pulled in. At this point, it's now below its 21-day moving average, and you're looking at. Let me just make sure this is the 100-day. I believe that's the 200-day. You're looking at the 200-day at 606. I don't have the 100-day up here right now at this point in time. Those are the levels I would be looking at. Right here, as of today, it did stop at 630, 633. Doesn't mean it's necessarily a screaming buy, though. Understand it's best in breed. It's a stock I do like to get involved with on the pullback, but now you need your timing tools to get yourself involved. Obviously, the key to this, if you just look at the daily, it's not really telling you it's ready yet. So I'll break down my time frame to whether it's hourly charts or if I'm trading it on an intraday basis, even smaller time frames, a 13, a 5-minute time frame, depending, and try to really work my way in. I'm not swinging. I don't believe the market is in that point where I think you need to just throw in a lot of swings. Understanding we are in earnings season, and yes, you could take a flyer if it's an options trade of some sort. If you really believe Priceline is going to beat earnings, you take an options trade that will, take advantage of that accordingly, whether it's to the upside or downside. But it's a stock that really, for the last 2 years, has been best in breed. You just got to be careful. If it ever misses earnings, it's obviously going to take a nice haircut. So far, it's holding tight as the market has pulled back. So, ideally, it shouldn't penetrate the 200-day moving average, which is 600 and 606. But from a trading perspective, around 630, I do look to buy it with a very tight stop.
All right, what about KOG? G Totoy asking, Mark, what are your thoughts on this one?
G Toy, what's up, buddy? KOG. Again, oil and gas stocks. Not my favorite sector. It's not the stocks I put in my back pocket for the most part, but overall, looks good. Looks good. It's a nice trending stock. You can see it bounced off June bottoms around $7, and it's now, again, I like to see bases after a new low is hit and retraces. I like to see a base against $7, $7.99, $8, above $8 for a bunch, for whether it's a week, 2 weeks. Obviously, the longer the base, the more powerful the move happens when you move outside that base. So if you're going to be trading it, get involved as close to $8 as you can. $8.50 is fine. And from my point of view, it's a slower mover, but it looks like anywhere from $9.50 to $10 could be in the cards. So G-Toy, you know the game. You know how to do this. Take advantage of it.
What about a stock like SINA? Audubon asking about this one. Closed up almost 4% today. Could it go higher? SINA.
Don't look at it. Don't get involved with it until it regains its 200-day moving average. The sector overall has gotten hurt. You can put a, Finser, JDSU. What is another one? I forgot it. There's a few of them in that sector. And Sienna, it looks okay, but the fact is, it needs to regain its 200-day moving average, which looks to be about 1430, 1440. Had a decent day today. Give it a few more days. If it can regain its 200-day moving average with a base, maybe I'll take a stab at it. The sector right now seems to be a little bit out of play overall, though.
Me Here Next Money asks, Mark, do you trade pre and post markets? What's your strategy for high beta stocks?
Do I trade pre and post market? I don't normally trade that often pre-market. Just more for the fact of I just have too much stuff going on and preparing for the day. I don't really have time. Post market only when there's earnings and only when really the best. Basically, this month I will trade post market. So if you're a T3 Live subscriber, certainly you can listen to our VTF and you can hear our play-by-play, what we do when Apple comes out with earnings, Amazon, whether it's Priceline, whether it's Google, which is next Thursday. JP Morgan will be pre-market. So I'll look at it tomorrow, but really only after hours during earnings, so a select period of time.
Now, we talked about JP Morgan with Laz before. Does your strategy, how does it compare to his heading into tomorrow?
Not that different. I heard Laz's comments on he waits to see what the price action tells you. If it beats earnings, I'm not a fundamental trader, so I understand what has happened and the background behind JP Morgan, the loss that is obviously going to be taken down this month. The question is, we know it's more than $2 billion. Is it going to be $5 billion? Is it going to be $9 billion? They don't really know. It's a monster company. Is it inconsequential? The market will tell us if it's inconsequential. As an investor point of view, it's a best-in-breed bank. You love to see if it gets around 30. I'd be dipping my hand in, certainly from a long-term investment. But from short-term, I'd like to see it regain some composure, possibly try to get above the 35, 36. I will try to maybe trade it up to the 200-day moving average, which again is 37. Once it regains its 200-day moving average, then I'm a little bit more excited, and I have a little bit more feeling that you can buy every pullback. Right now, it's a weak-looking chart.
Well, we also talked with Laz about Facebook and its impact on stocks like YELP and ZNGA. Here's one from Levaco T3 Live asking, with the Facebook news affecting LinkedIn, where do you think LinkedIn goes from here? Does it sit until earnings?
Levaco, what's up, Steve-O? LinkedIn, I was involved with it yesterday around $100, looked strong. I got involved a little bit today. Nothing for a swing if we're in a different tape. I think it's one of the stocks, certainly from the social media standpoint, showing its strength. $100 seems to be that number. Again, $98, $100 seems to be that number that buyers start to step in. 105 to 108, I'd probably be looking to take your trade or possibly go on the other side of it, putting some shorts on. I think it's range bound until earnings. So It regained its 21-day and 8-day moving average today. I think the trade's done at this point in time. I think you're going to be dealing with noise over the next few days, unless it breaks out of that range to the upside or downside. So I'm avoiding right now. Every time it gets back to 100, I will probably dip my feet on the long side.
All right, Mark, thanks for all your insight.
Okay.
We're going to take a quick commercial break. We'll be back with Laz. Keep the questions coming, guys. We'll be right back.
Thanks, guys.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders to understand how to develop an edge in the markets so you can put your money to work with confidence. The T3 Live approach includes a mix of training, trading, and technology to help you learn to recognize, adapt, and ultimately take advantage of different market conditions. So what actually separates T3 Live from other educational firms? For one, transparency. We show all of our positions live, so there's no smoke and mirrors. Basically, we put our money where our mouth is. We have to because we're regulated by the SEC and the Chicago Board of Exchange. Number two, we're real traders. You'll be learning from real professional traders that make a living trading their own proprietary trading accounts, not just instructors that don't trade. Your goal should be to associate and learn from big traders who can teach you how to take your trading to the next level. And three, credibility. Millions of people turn to places like CNBC, Wall Street Journal, Fox Business News, and these outlets actually look to T3 Live for information. No other educational firms are asked to be a consistent contributor. We at T3 Live would like to get you started with a step-by-step method that has been proven over time. The same blueprint for success that I've gone through. It's not a weekend seminar, it's an approach, a mindset, a process to show you how to take control of your financial future. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our Foundation 30-day online home study course. The reason I'm willing to give you such a valuable course for free is I'm sure that once you complete the program, you'll want to continue your education with our team. All you have to do is fill in your name, email address, and I'll see you on the other side.
We're back answering your questions live. I'm joined again by Evan Lazarus. Evan, welcome back. Question from...
Thanks for having me back.
Stock Craze asking, what do you think of NSM?
Let's take a look at NSM here. I'm not real familiar with the company, so it's hard for me to give any qualitative feedback in terms of fundamentals. We didn't talk technicals. We can take a quick look here at this chart. Really, really interesting looking type of trade. Stock bottom down here 14. It's had a nice run to 24. Rising averages, nice little short-term trend in place here. I suspect even today you saw a little pop against the 8. This may not be done on the upside. This may, try and push, give you one more new high. It is a little extended here, so it might go into a longer-term basis. Percentage-wise, the stock's basically been a double in the better part of 8 weeks. So I would probably, if I was on the long side of the trade, I probably would want to lock in some profits here. If I'm looking to initiate, probably a little bit of a tougher trade. You might see one more push higher through those highs, through these current highs at, let's see, 25, 24.75 in that area. But stock relatively strong to the market, looks good. Nothing really bad to say about it. Looks like it can definitely go higher.
Now, you mentioned that we're in a day trading environment as of late. Market Picker asks for you, how often does that day trading involve index ETFs, like spiders?
All the time. I mean, my philosophy and the philosophy we teach in the Active Trader program is really not specific to just trading certain stocks. It's the ability to trade anything, the ability to analyze price and the movement of price, so that you can pretty much trade anything. And oftentimes I'll trade spiders, I'll trade diamonds, I'll trade Qs, I'll trade inverse ETFs, I'll trade the VXX, I'll trade volatility, I'll trade anything. And the traders in the program and the traders on my trading floor are armed so that they can trade anything. It's really about the language of price and being able to interpret it and understand it so you can make just good objective decisions about risk. And I say that all the time. I was trading spiders today as an example. So, index ETFs are a part of what we do. When certain indexes are in play, you'll see it, from time to time. There's times to be there and there's times to not be there. I don't trade the spiders or the big broader indexes every day. But when there's volatility, Like in this tape, you know, you take a look at the spiders as an example here. We can look at a chart real quick. Look at the size of these candlesticks on a day-by-day basis. You know, you're getting large movements on a pretty consistent basis. And when you have that volatility, even though it might not be directional, there's opportunity. So, you know, that's stuff that as a short-term trader, I personally and a lot of my traders, Mark too, will gravitate to. Redler, all of us will gravitate to these instruments. You know, when there's liquidity there, when there's volume, when the setups are what we call actionable. So ETFs are a very, very important part of what we do, but they're no different than any other instrument that we trade, you know, outside of the general ETFs.
Well, speaking of the spiders, Unique Apple is calling spiders back to 135.5 by next Wednesday and wants to know what your take on the probability of that happening is.
135.5 by next Wednesday. He must have that crystal ball that I don't have. You know, there's not much I can say to that. It sounds more like a statement than a question.
Right.
So I'll just let it be what it is. You know, again, we went over this earlier in the program. You got to be careful here. We're flirting with potentially breaking lower in a flat 21 EMA, and I say this all the time, part of the active trader program. Generally, stocks will trade on a sideways trend. Sideways, although most people don't think about it, is a trend. There are three trends: up, down, and sideways. And when you're not cognizant of when it is a sideways trend, you can do a lot of damage to your trading and your P&L. So understand that in sideways trends, you're gonna find a lot of, you know, support, resistance, you know, areas that you see change occur. Down, up, down, up, down. You know, we could trade lower to 131 and still be in that sideways trade. And then, but the best and most actionable setups are generally at the higher end of the range or the lower end of the range. And as we sit right here, let's call this the middle part of the range, this is where the area can be the most dangerous because price can chop around and you get a lot of these intraday shifts. I know there was a question about every day at 3 o'clock or 3:30, the market changes. We get these crazy reversals at the end of the day. Well, the reason you're getting a lot of that, you know, reversal type action is because you're seeing, let me change my chart here real quick. You're seeing just that it's reversion to the mean. Stock will trade lower in the day and rally back in the afternoon and then trade higher in the morning and sell off later in that day. And it's a net. We're not making progress. We're not trending higher. We're not trending lower. It's just a lot more intraday volatility that you're seeing. So if you're not ahead of the curve and you're not understanding that the possibility of that exists, because like I said to start my whole rant here is that sideways is a trend, you are going to put yourself in a disadvantage because what you're going to do is you're going to be shorting on the lows and you're going to want to be buying on the highs. And let's just take a look at today as an example because it presents, from an education standpoint, it presents an interesting, you know, topic. Look what happens here. Stock makes a new low this morning right here. Stock breaks down. This is the spiders. Sits on the lows all morning for a better part of an hour. We start to make new lows. The herd mentality is short the lows. Well, what happens at new lows? We rally back up, right? Then we sit in a base for an hour. Now everybody wants to be long. All the day traders get long right here, and what happens? We turn down hard. So being actionable at highs and being actionable at lows in a non-trending market, more times than not, can be a very, very dangerous trading strategy. I know it looks like that's the right thing to do, but you have to expect that a lot of times breakouts will fail and breakdowns will fail, and that's part of understanding. Part of our, you know, trading approach and our strategy here at T3 is understanding when the odds favor failure and when the odds favor, you know, follow through.
You know, I was just talking to Mark before about his strategy with high beta stocks and how he trades, whether he trades pre and post markets. Mm-hmm. We were answering Me Here Next to Money. How do you trade? Do you trade pre and post markets? And what's your strategy for high beta stocks?
Okay, so I trade high beta stocks. I'll trade, you know, volatile high beta names. Just like Mark, we have the same approach in that regard. We've been doing that for a very, very long time, so it's comfortable. It's natural for us at this point. For somebody who's more of a novice or starting out, I probably don't recommend getting your feet wet in trading by trading Apple and Google and Priceline and some of the higher beta symbols, is that you're just naturally going to incur more risk because there's more speed, there's more volatility, the ranges are bigger, the risks are larger, as are the rewards. So tougher way to start, but As far as the second part of the question, pre and post market trading, I generally don't trade pre and post market. If I come in the morning and a stock is sitting at a level where I believe, it's in an actionable area, be it long or be it short, I will put on a feeler or a tier 1, like we teach in active trading, in that area, pre and post market. But as far as buying and selling as a trade in the pre and post market, I would say 99% of the time, if ever. Very, very rarely. I generally won't trade if there's not liquidity. I want liquidity, and pre and post markets are not filled with liquidity. The only time you'll generally see liquidity in a pre or a post market is when there's an actionable catalyst event, an earnings trade or some sort of upgrade or downgrade where a stock is doing, heavy volume in the pre and post market. So I know that I have the ability to get into a trade as well as the ability to get out of a trade. Also, I know there's buyers and real buyers and real sellers there, as noted by the volume. So unless there's liquidity pre or post market, I don't touch it. So like I said, 9 out of 10 times, never. Every now and again, I'll put out a feeler in the pre or post market if I think a stock is gapping up or gapping down into an area of significance, major support, major resistance, what have you, to get an idea of a level or to feel something out and watch how it develops as the market opens. But I don't recommend it as a time to trade.
Now, what would be your favorite A+ setup, and can you give an example of that? That comes from King Kong Trader.
An A+ setup. Well, there's different types of trades. There's swing trades, there's day trades. There's not everything is the same. So I don't know if I have a very favorite, but for me, what I like is continuation trades. I like to find, as an example, let's see if I can show you one here. A stock that, let's see, let me get a good example here. I like gap ups with downtrends. So if I find a stock that has, let's say, a declining hourly EMAs. So here's an example. This is really what I like to gravitate to. Stocks that have, railroad track hourly, what we call analytical time frames, where you have that 8 and 21 that are declining. You have railroad tracks. There's a commitment to selling. A stock that gaps up with hourly declining averages is something that I will look to short. And the converse of that would be stocks that have rising railroad track hourly EMAs that's gapped down, I'll look to buy. Because basically what it is, it's a continuation type trade. And they're not easy to trade, but those are the ones that I generally like to gravitate to as day trades. If we're talking about swing trades, it's a different type of trading strategy off of different time frames. So depending on the type of trader you are, day trader or swing trader, there's different strategies that I will tend to gravitate to based on what I'm looking to achieve. So I don't necessarily know that I have one thing that I do. I have multiple things that we do and multiple things that we teach. Even Mark and Scott, we all sort of look to do the same things. We may do them in different ways and in different time frames, but essentially it's understanding what you want to accomplish. I know that tomorrow I'm going to look to day trade. What are the best actionable type of day trading setups for me? If we look at today, today was a continuation setup. Today was a buy setup right here. We call this the catch play. This is the spiders we talked about, where a stock, breaks down, rallies back, takes out the high of the day, which you can see it does. At the high of the day, there's going to be congestion. You get a 3-bar pullback. This is the key part. A 3-bar pullback into what is now a rising 8-period EMA. We call this the catch play, and the result is another leg up. So this continuation trade, and we saw 2 good catch plays today, one in Apple. Again, rallies back up, 3-bar pullback into a rising 8 EMA, and you get that second part of the trade. Those are just examples of trading strategies. Is it my favorite? No, I don't know if I have a favorite, but I have probably about 10 to 12 good actionable strategies depending on what time of day, what I'm looking to do, whether it's mean reversion or continuation that I operate from. So I know that that's a long-winded answer, and I don't know if that's an A+, but I try to look at everything unto itself, and there is no better, there is no worse. So I have sort of an objective, fairly balanced approach.
Starbucks is on Don in Atlanta's radar, asking what are your thoughts on it as a possible short?
Starbucks. It doesn't look that good, if I'm being honest. Starbucks, had a great run, and the run came to an end back in May, April, May. Just to give you the whole picture here, you can see the type of move that it had. And it's been in this consolidation phase since basically the mid-May when it bottomed down here. Obviously, the line in the sand is, down here around 51, plus or minus a little bit. Stock's trying to hold that level. So you can see multiple touches here. But has it been actionable to the long side? Not really. Today we saw a little stick up, but nothing that I would get excited about. It would really need to, I'd need to see some follow through on a second or a third day. Below this, major support level, the stock probably will, continue that breakdown, to next level support, which I would call around 46 to 48. So it's in an area where it could go either way. Obviously, we got to look and watch it on a day-to-day basis because it's at an area of support and it could turn up, but it also could, continue here. So interesting trade to keep an eye on. This is what I would, we talked about this today in the active trader room. This is an actionable trade. It may not be ready yet, but it's on the watch list. Building a watch list with a stock like this so that you're prepared for long or you're prepared for short is, really a key to success. Having a very focused, narrowed, compelling watch list at actionable areas is a great way to trade.
Now, we discussed LinkedIn with Mark before, and we've got a new one from Cashflow Trader saying, what are your thoughts on LinkedIn, and where do you see it going on a short-term basis? It seemed to show great resistance and volume today.
Cash flow. I like that name. Well, let's take a look at LinkedIn, but let's do it without the candlesticks. Great little technique. Again, little visual technique that I try and train with because it helps put things into perspective. So you're not, because what I notice with traders, especially day traders, is that they get focused on every little candlestick, every little wick, every little tail, every little high, every little low, so that they're trying to, maneuver what may not be maneuverable. This to me is not an actionable, it's not a trending trade. You have basically a flat 21 that we talked about with an 8 period that whipsaws up and down. That to me, before I even look at any high or any low, tells me that this is a stock right now without a trend. So the best trade, truthfully, is to stay away from this because if you're the type of trader that's looking to get in something and have it trend higher or trade higher or break out, you're probably going to miss it because right now it's a lot of whipsaw. Let's put the candlesticks back in and you'll see ebbs and flows, ebbs and flows, ebbs and flows. Yes, it's got a nice little base that it's been in here, but there's nothing about this trade right here, right now that says to me, I must be long. I must be long. I have to own this. This is a need to own. You could make the argument that above 110, or below 100, it becomes actionable. But right now, to me, your best bet in this trade is to probably stay away until you get that catalyst or that price movement or that pattern that really says something has changed. The interesting thing about this is that, and it's a good point to make, is that as a trader, you don't have to be the first trader there. If you like something long, you don't have to be the first, trying to pick a bottom or get in, at the very low. Let the stock come to you. If it's going to be a good long, it's going to break out and it's going to set up and it's going to build a base and a pattern that you can say it's now a much lower risk, more compelling situation versus trying to, maneuver when there's not a trend and there's not a breakout. And I see traders do this all the time. They get fixated on an idea. Whether the idea is right or wrong, they get fixated on something and it's just the wrong time. We are in the business as active traders of timing. It's a timing business. It's not necessarily about being long or being short. It's about being somewhere at the right time. And there are ways to time trades and there are ways to put it so you can evaluate risk much more clearly, and really, really understand what it is you're risking. This is a trade where if you were to say to me, hey, would you be long? I'd say you probably got a 50-50 shot here right now. And that's just not the trade that I think is best suited for most people. So I teach my traders in the active trade, pass. Go on to the next one. There's a better looking chart out there. You don't have to work hard money. Search out, seek out, talk to Mark, talk to me, talk to Scott, talk to the VTF, talk to the community, find that lower hanging fruit.
Now, you mentioned before the importance of cultivating a watch list. And Market Picker says, going forward into tomorrow and next week, what will you be watching? Are there any actionable setups you're watching, long or short?
Well, it's a good question. Basically, you know, what's my watch list? What am I watching and why? I've been watching stocks with rising 21 EMAs and declining 21 EMAs. I've been watching trending stocks. I've been trading, you know, the LVSs of the world, stocks that have committed direction. I've been trading SINA. I've been trading BIDU. You know, these are stocks that have an outflow of capital. And I've been looking to short bounces. And it's been a successful strategy to date. In addition, I've been trading Apple back and forth from a day trade perspective. I really don't have much, you know, in terms of an approach with Apple other than just quick day trades off of 15 or 13-minute charts, you know, like you saw today. But overall, I like this stock. Through 620, I'd probably become more aggressive with it. But right now, it's just a day trade approach. And I've been day trading the spiders. So a very, very focused watch list with a, you know, a rationale for everything that I look at. Another one we've been watching is Lulu. Again, a commitment to the downside. Macy's, a commitment to the downside. Look at the difference of stocks that have declining 21 EMAs. Trending stocks, whether it's uptrends or downtrends, are places where easier money lives. That's what I try and focus my watch list on.
That's great advice. All right. Thanks so much, Evan. Thank you all for sending in such great questions.
Wait, hold on, Britt.
What?
Can I stop you?
Yeah, stop me.
Active Trader Summit. You have to be there to participate. This Saturday, check out t3live.com for details. In Manhattan, it is going to be nothing short of awesome. I'm speaking on peak performance. Mark Sperling's doing a presentation on trading big positions. We are going to spend all day talking shop, talking trading, talking strategy, networking, communicating, sharing ideas. It is going to be lights out, the best event. I'm psyched. This Saturday in New York. Go to the website for details, and that's my plug. Thanks, Brittany.
No problem. Thank you all again. Meet us right back here next week, and have a great night.